Hi, everyone who already joined us. We're waiting for a few more seconds, I don't know, up to half a minute. So all of us will join our webinar and then we'll kick in. So few more seconds, please. Okay, let's start it. Hello, everybody. Tere, labas dienas, labdien. Happy to see you all virtually. We will start our traditional quarterly review on the commercial real estate across the Baltics. We will be talking about offices, retail, industrial, and we will touch a little bit on investment, but from a different perspective. We would like to focus on a specific real estate, residential, and build to rent, because not only across the Baltics, but also globally, this is becoming a quite big trend lately. And because of limited capabilities and capacity of this Zoom call, if any of your colleagues who cannot join us right now, please suggest them to go on our Facebook page, BREL Forum, where you can where they can see it as a live stream. And some more technical things. If you would like to ask any questions, we encourage you to write in chat, and we will be able to answer you again in writing in chat. And tomorrow you will receive this property snapshot in your emails. With no further delay, let me start, and I will be happy to speak a little bit about offices and what is happening across the Baltics in this segment. So I would like to break it down in two parts. Firstly, to talk a bit of supply side, and then to speak about the demand. If we're looking at the supply side, so there's plenty of new projects in the pipeline currently. We have calculated that there are roughly 400,000 square meters of modern office stock under constructions as of today in the Baltics. Those numbers are ambitious, those numbers are impressive, and the quality of stock is very, very good in our opinion. There are many projects, of course, to mention, but just to give an examples of some of them. Capital in Tallinn, they have started groundworks for the Valaya quarter. It's a quite big mixed-use development in the city center. Then in Riga we have active construction works happening by Verde, developed by Capitalica, and in Vilnius there are quite many interesting projects as well. What is happening with the other stock? We do see that because of new supply coming to the market, we see pressure on existing office buildings, mainly B, C class, lower quality. And it's not just in spite of the fact that better quality is coming to the market, but of course, COVID influenced how end users of office space are reacting. So there are more requirements coming on the table, like touchless solutions, like better quality of ventilation in the office space and things like that. So this is something we're also observing in terms of supply side and how it is influencing the market. Because of those square meters and because of the vacancy, what is happening and increasing actually across the countries, we see that office segment is becoming tenant-oriented market. What do we mean by that? We believe that tenants are now more in the capacity to ask for terms and conditions for the lease contracts. And mainly I would be talking about higher fit-out contribution from the landlord side into premises fit-out. Flexibility of the lease term is something that is happening. It's been on the market since 2020, but it's becoming more important for the tenant. So flexibility, in our opinion, is here to stay. Expansion rights, reduction rights, shorter lease term. This is what we see across all discussions, at least where we are participating. And I do believe this is important to take into account for all market participants, being that landlords, funds, or financial institutions. On the supply side, what is worth to mention is what we see hidden vacancy. In terms of the sublease, the trend remains. We see in financial sector that end users are ready to reduce the required space, or at least the space what they've been using before. Now they can give it away. In many cases, this is happening with the premises in as is condition, good quality, together with furniture, and that will also somehow impact the supply side and the market in general, because those who are in search of the new office space or relocation will be, they are having more wider options to choose from. And a little bit on the demand side, I would say after Easter's, what we starting to see again across the Baltics is leasing activity starting to pick up. Maybe deals to be signed in 2020 with possible relocation in 2020, that's less activity. But if we would looking at the pipeline of 2022, 2023, we do see that activity is increasing, and we are becoming more busy with those requests where tenants are looking for new solutions. And there are two ways where tenants are busy right now. One, and predominantly important for them, is to understand their workplace strategy and how do they utilize their existing office space. So remote working is here to stay, and most of end users are now trying to figure out how do they combine that. How do they operate in the coming years, and if that will be a trend for long term. And we see it's in their minds. They're really preoccupied with those discussions internally, and I see that there are strategies already in place for many organizations. Depending on the sector, there are different ones, but they are starting to implement those strategies. And then this second phase is looking for the appropriate space. But office square meters will be desired the way we see it right now, and it's going to be a hybrid strategy. Some remote home working, office usage, and maybe third places. A good example, not from the private market, but also initiative from on the government level, is Ireland, which, if not mistaken, on Monday announced that they are facilitating a new program to establish 400 office hubs across the country in rural areas. So employees are able to work not only in Dublin, but across the country in smaller cities. By that, they're encouraging this remote working. And if I'm not mistaken, they're also giving some tax breaks for individuals and corporations. And then maybe coming back to the Baltics, and maybe our region, Central East Europe, we see that GBS sector is becoming, again, more active, hiring people, not only in Poland or Czechs or those countries, but also in the Baltics. So we see anything related to that sector is active, increasing in activity. IT solution, online solution, those are the industries right now on the rise. I do believe this is all from my side, from offices, and I will give word to my colleague Agia to speak about retail.
Thank you, Eric. Hello, everyone. Today, I probably have the hardest topic to discuss because no doubt retail industry has been significantly affected by the pandemic. In all three markets, professional retail is still in a lockdown, is still severely restricted. So first, I will start with a bit of an overview of those restrictions and how this has affected the market. Estonia was doing better. January, February, retail was still operational. However, starting from mid-March, Estonia is in lockdown. Basically, only essential retail operation is allowed. And then pickup points must be outside of the premises. Following this example, an example of Lithuania, where similar to the first lockdown, the first stores to open were those with a separate entrance from the street. So in Latvia, they had these two strategies in a way incorporated into one. Starting from Easter, we have stores below 7,000 square meters or less than 5 tenants allowed to operate, while shopping centers, even though previously they were allowed to have pickup points inside their premises, now can have pickup points only outside. So how these decisions have affected the market is that the professional retail is mostly still not operational. However, street retail is in a way having a boost. However, what's happening for our economies that are car-oriented, shopping center-oriented, and most of the tenants, mass market tenants, are not in street retail. It means that it's the local operators that are having some kind of footfall. What we see in Lithuania is that emergency exits are now used as entrances to the stores, and some landlords are even opt to build additional entrances to the stores so more stores can operate in shopping centers. And if we look on the retailers that now open, for example, in Riga, they have been closed for almost 5 months. They were closed just before the Christmas. So when they opened, they had 1 working day from the decision being made then to the day they had to open. So basically they opened with the same production, same stuff that they had before the Christmas in the stores. This is what retailers have been saying most of all this time, especially fashion retailers, that they currently have no cash flow and they cannot buy new spring collections. So this is what's been going on all over the Europe. This is an essential problem in the market. If we look for the government support, then previously in the first wave of COVID, there was some support for retail operators in Estonia and in Lithuania. However, now there is none as this far. While in Latvia last week, 20 million euros were agreed to be distributed to shopping centers. In a sense that the support is based on discounts given to rental rates, rental payments. So in this case, they are in a way supporting both the landlord and the retailer. We'll see how that the distribution will go and how much of the support it will really be. Moving forward, what this all the pandemic has affected is that the grocery market is booming, especially in Estonia. All largest grocery operators, Maxima, Prisma, Rimi, Silver, announced some kind of expansion plans, new locations during first quarter of 2021. While in Latvia, we were waiting for Lidl to open their first stores. Russian discounter Mere managed to open their first store during March. They have already several stores in Lithuania. Another segment which is ready to expand and move further is do-it-yourself and home segment. In Riga, we'll soon have one additional depot store. In Vilnius, we saw that during Q1, construction works of Seneca store were started just next to upcoming Vilnius outlet. And also we saw opening of first Hortus gardening store in Riga also during March. From demand perspective, basically this is all that is also happening. Those are just the only active segments. During Q1, there were only few transactions signed. The market is quiet. Everybody is using wait and see approach, and those few agreements that have been signed, for example, in Riga, we saw slightly lower rental rates than they would have been a year ago. Overall, it's still not a trend, but as there is not enough evidence in the sense that there are not many agreements being signed. However, what we see is that step rents are becoming more common just to incorporate this pandemic effect. If we move further to how all these restrictions have affected e-commerce, then e-commerce is growing. It's growing like crazy, if I can say like that. In January and December, the growth was more than 50% in the Baltics from the official statistics. The largest growth is in Lithuania. However, here, my comment would be that many platforms that are operating in all three markets are just registered in Lithuania. So the growth overall is huge. However, what this e-commerce booming is doing is that the logistics or the last mile delivery cannot accompany this large demand that is there. We see extended these delivery periods. And what was interesting also that the returns are very high, and I'm not sure how these statistics are calculated, but almost 1/3 of all goods that are sold online are later returned, while in stores this returns are less than 10% normally. And yes, and the one interesting thing is that if we are speaking about the e-commerce, then during 2020 we saw About You and fashion e-commerce platform entering the market. Then in 2021, Zalando will enter. And this means that this segment is becoming, this market, Baltics market, is becoming more interesting, not only for physical store retail international tenants, but also for e-commerce tenants. If we are speaking about the future now depends on government decisions, the spread of COVID-19, the government support mechanisms, and is quite unclear. And so we'll see. We hope that the pandemic won't spread as fast as before, and that retail will be able to open and operate, and it's all going to be good. But for now, it seems quite pessimistic, and the impact will be seen for 1-2 years at least. I'll be giving floor to my colleague Bergmans to comment more on industrial market, and I hope to bring more positivity to you.
Thank you, Agi. So I really would like to give some positivity to the market. There is something to give for sure. First quarter in general for logistics and industrial is usually slowest in the market, like in the year, and this time it was no exception. However, it was not boring quarter in the year, and there was quite a few things that kept us and the market occupied. So to name one of the really important things is the demand for land, especially larger developments, 10+ hectare development, 10+ hectare lands, 5+ hectare, and so on and so forth. So basically, the demand was mostly generated by both logistics companies or end users, as well as developers. And we've seen the interest moving across borders by some local one country-based companies from them to pan-Baltic players. In general, it was noticed in all capitals. For Lithuania, I would also mention Kaunas for sure, and even to some degree Klaipėda. So now for Tallinn, it was the hottest location seemed to be Riga municipality, where this construction recently started of IKEA concept store, and where East Capital has acquired this 30-hectare land plot in the end of last year, and I believe they are pretty happy with the acquisition. And what's bringing some concerns to the market and to the potential buyers, developers, is that the Riga municipality seem to be planning or considering switching from construction, from selling the land plot actually to leasing the land plot, to that kind of structure, and that's a bit concerning for some of the developers to understand how will it work. For Vilnius, Riga, I would say it's all the directions more or less with the short proximity to the city. For Kaunas, it's mostly A1 northern part of the city, from A1 to intersection to Via Baltica, and even behind that towards Klaipėda, thanks to this new construction of a new intersection, 211 intersection, which will help, which give opportunity to come back to the city close and faster. So the demand was really high. On the other hand, the supply was and is really limited, especially for that bigger parcels of the land. And basically what we see that the market is shifting a bit to this seller's market and already driving the prices up. Now, regarding the lease market, as already mentioned, in general, the activity was rather slow due to mostly typical reasons, also some impact by COVID-19 situation, but we already noticed the discussions and the consideration of the allocation building up towards the end of the quarter. So basically, the expectation is rather simple to activity levels to demand to rebound in second quarter, and basically mostly by the same recent champions: logistic companies, parcel delivery companies, online retailers, and to some degree, especially maybe in Lithuania, it's production companies as well. Stock office is worth mentioning as a separate segment as well, still being really favorable in terms of the activity and demand. Tallinn still keeping up and keeping this leading role with 10 projects under construction of a total 32,000 square meters by the end of the quarter. On the other hand, Vilnius is already trying to keep up with 24,000 square meters under construction in the quarter. Of course, the difference is that in Vilnius it was only a single project started by Darnu Group in the northern part of the city, compared to 10 projects in Tallinn. For Riga, the construction terms is still rather slow. On the other hand, when we start looking at the planning pipeline, which is in the upper right graph in the slide, so it's already building up. It's building up for all three cities. For Vilnius, maybe to mention that it seems to take a little bit different path in general, providing several larger scale projects. One was already mentioned by Darnu Group. Another one, the design was just launched by VPH and IKEA next to IKEA in Vilnius Airport, and that's the first stage of the project is going to take 12,000 square meters. Now coming back a bit to the speculative market, speculative development. So there was no significant completions in general in the market, besides maybe Pitches Green Parks, almost 20,000 square meters in Riga, but that was already leased at the end of 2020. So not much other deliveries were noticed in the market. On the other hand, just to take a look at new construction sites launched, so there's quite a few to name. For example, in Tallinn, it's in regular development. It was expansion of around 10,000 square meters of BLS project. Then it was 5.5 thousand square meters of Arma stock office project and several smaller ones. For Vilnius, Sirin has launched the 20,000 square meters in the J55 logistics park. Vilpra has started construction of 7,000 square meters logistics center, to be followed by second stage of 4.5 thousands, and maybe also worth mentioning, specific but interesting modern R&D facility of 33,000 to be launched by already started actually by BOD Group. So yeah, and moving towards the planning pipeline. So Tallinn is a bit conservative, a bit slower, but in general the numbers are pretty decent. While for Riga and for Vilnius, the planning pipeline looks, I believe, pretty impressive in more or less in all of the segments: stock offices, speculative development, and builders who built on kind of projects. On the other hand, not everything is really bright in the market. One of the concerns is the development costs, which are rising. So while the construction costs and the increase of that we've been noticing for last few quarters, now to that it's adding land acquisition costs that are also rising as mentioned before. And that was not enough for Vilnius. In Vilnius city municipality, the developers had been frightened by new infrastructure tax, which exceeds the actual historical infrastructure works, cost of infrastructure works a few times. But the way we see it, while there's now a lot of discussions now and a lot of concerns, but the way we see it, and we want to believe that it was misfortune overlook, and that will be actually fixed in the nearest future. So that's how it looks. And regarding the vacancy rates and rent levels, so basically everything seems to maintain the same levels and to keep stable. And maybe that's one of the shifts in the trends that a quarter ago, at the end of 2020, we were predicting for the Riga's market for the rent levels to go down and activity levels to increase due to this really huge construction and planning pipeline of speculative developments. On the other hand, what we see now is that mostly due to those rising construction costs, the prices are keeping more or less at the same level. And due to that, the vacancy, the transactions are happening and the vacancy levels are expected to remain more or less in the same levels. So that's about it, those 90 days in 10 minutes. And now I'm handing over a microphone to Angela.
Thank you, Regimantas. I hope you can hear me well. I'm joining from Age's account. We had some technical difficulties with the sound, but I hope you don't mind that. So let's welcome our guest, Kristaps Semerovs, who is representing CRE Rentejas. And well, CRE Rentejas recently, I would say, debuted on the map for real estate investments here in the Baltics by selling more than 170 apartments, rental apartments to BTA recently. So, Kristaps, maybe if you can introduce your company in a few words and tell us a little bit about how big was your portfolio initially, when and how did you decide to start in this segment?
What to say? CRE Rentejas actually was not like originally a developer of the property. It began approximately 15 years ago as a small house management company. And by accident, in 2008, they had a house which they had a plan to to split as a separate apartment and sell it, because you know in 2008 and 9 we had crisis, and then it began like a rental house development. Yeah, at the moment we have more than 300 rental apartments, 20 premises in 6 different addresses, and we have one more house on Valdemar Street with 100 apartments and 10 premises in process. We're doing full development process from buying, planning of the property, till renovating it, renting it out, etc. And of course managing. Yeah. What else about this plan to sell something? I had the question from your side. Of course, it wasn't the basic plan to build a house, rent it out, and sell it. And we would do it already in 2015, 2016, after we are finishing and renting it out. Actually, it happened by an accident. We were planning to, well, we need like extra investment for buying new projects and continue our job. And of course, banks weren't the most interesting option for us. That's why we decided to sell this part of the property. Yeah. Other questions?
Okay, thank you for that introduction. So, okay, so it was not maybe a planned exit, but I think you have managed to make quite an interesting product. And to maybe finish up with these transaction questions, after doing it, actually, how would you evaluate the overall liquidity of this market? Was it easy to find a buyer in the Baltics, or maybe not so much? And what maybe difficulties you faced?
Yeah, one of the most difficulty why we have such a few like rental houses in the residential field, it's definitely connected with the rental law. You send me some questions about it. I think it's going step by step. It's connected with the investment in the real estate in this field. Of course, there are a lot of uncertainties regarding how to deal with the tenants. One of the risks is this bad debt, who are like tenants who can, according to this lease law, they can live in the apartment, not pay, and we cannot do anything about them. Just sue them and wait extra 5 years to this court to end. But yeah, the most difficult to find this buyer was more or less connected with this situation, because if we talk about the local buyer of the real estate, they are planning to get pretty fast this income from their investment. For example, 10% income, which with the rental houses, if we talk about this residential houses, it's more or less impossible. It's more like a marathon, less like a sprint. And of course, then there were a lot of clients from the local market coming to see the houses. Of course, they liked the ideas, they liked the performance, and etc. They were telling it's a good job, but afterwards, those offers which came was much more lower than we were expecting. Then it's better to leave the houses as our property and continue our job. And what about the outsource investors? The main issue was this risk evaluation. Of course, the outsourced investors who are coming in with the quite high, you can say they're expecting lower yield from their investment, but then they start to attract lawyers and banks to have some information regarding the risk, and that was the huge problem. because of this rental law, with those problems with the tenants and that debts and everything, they were evaluating this field as a high-risk investment. But what I would like to say about this, why we are choosing it, it's definitely, of course, there might be some more problems with each tenant. You have a lot of tenants, you have a lot of work to do, but at the same time, the risk is split. You have you don't have one huge tenant who is leaving in a one crisis day. For example, now we have COVID. There are companies which are going bankrupt and they are leaving a huge those office centers. In our case, the tenant is the client. It's a person, and people have to live somewhere, whether it's a crisis or not. Of course, it depends afterwards how much they're paying and how big is the income, but still, it doesn't stop.
Did you even see? Sorry to interrupt, but did you even see kind of large increase in your tenant rotation throughout your portfolio during the pandemic, or not so much?
I think the guys who were talking about the office premises, they have a situation of rotation and everything. But in our case, of course, it's much more than, for example, 2 years ago. But still, if we are having like 3 to 4% of vacancy in our houses before COVID, then now we have 10% maximum. It also depends which house, what prices do we have, etc. Of course, there is always people going away from the rental buildings because they have bought their own properties, they have found something bigger, smaller, and etc. But I think regarding this, considering this crisis, only 1/3 of those who are going away is those like COVID victims, so-called. Yeah, we can see that market has changed. For example, if a year ago to rent out a studio apartment, it took weeks to do that. Then now we have to struggle a little bit to find the client because a lot of Airbnb's apartments are stepped in the market and made an extra competition for us. But it's not going to be like a permanent situation. And still we're renting it out. It's not like our properties are staying empty for a long time. Yeah, I didn't mention in the beginning, but our most apartments, if we have like profile is 1 room studio till 2-bedroom, 3-room apartment, and those like square meters usually are from 25 till 60 square meters, and that is the product which is going well in the market.
Yeah, maybe we'll touch a little bit on your professional view on the ideal product for the market in the very end. But from what you mentioned, I have 2 more questions for you. So you mentioned that many, especially local investors maybe, but also as I understood, international investors as well, viewed residential as a high risk profile investment. But were it only this feedback, was it only from investors, or also, for example, the bank financing was a bit tricky for you as well?
We weren't especially specifically searching for bank loans to do our job further, to invest in other properties. But it was all this process of finding a buyer was connected with the bank, because of course the investor is not coming with 100 his own capital. He will probably take at least 30-50% from the bank, and that was one of the reasons that they offer, whether outsourced investors from Europe said no, we're not doing that, or the locals just gave us lower the price than we expected. It was connected with the banks and bank offers, of course, because there are banks, when they are evaluating this field, they are taking into consideration that what will happen with the tenant if he decides to leave. Of course, according to law, they can inform us 1 month earlier and leave. The second thing, what we're going to do with the bad debt, they can decide not to pay for several times. But opinion shows that still these risks which we have in this market. How can I say, are not like the main issue why not to do the business, because the business is good. And what I like the most in this business, that it's related with the relationship. We heard that some minutes ago someone told that in the office the relationships are starting to take higher part, and in our business it was all the time was the main thing. Yeah.
Of course, but interesting to hear about the associated risk profile of residential, because in many European markets, residential for many years is one of the main investment vehicles for professional funds, and for huge investments are made in that segment. So I hope that our market will grow as well and evolve into that. But coming back a little bit to this new legislation and the changes in the legislation. So being very concise, but maybe can you name the things that this legislation actually solves, the problems, and maybe the things that this legislation actually still doesn't solve for this?
The main aim of these changes in the law were to attract more investment in the residential field of rentals, and to make more good quality offers in the market regarding the rental. I think these changes, the most winners of them will be those who have inherited buildings with the old tenants from the Soviet time. Yeah, this law corrects the situation that they can live there permanently. Now till the 2026, their deadlines of the rent has been solved and written in the contract. Yeah, but for us as already active investors and developers, we don't see a huge positive impact. It's almost saying the same. Of course, the new law is telling that if the contract has ended, tenant has to leave the apartment. But no one knows how it's going to happen. Whether we have a possibility as a renter come to this and take the stuff out of the apartment, I'm not sure. Are going police coming to solve this problem? No one knows. And again, time is going to show it, whether we have some positive impact from those changes or not. Because it's nice when it's written, but how it's going to be in practice, we don't know. And also, what the good thing was written about it, that finally we will have a possibility as a landlord write in the land book those rent agreements to get some discounts on property tax and etc. But still, there are no tools for that. No one knows how it's going to work, because now there was a possibility to do that, but we had to go through a really long process with notaries and land books and everything. But and at the end, there is no use. There's a lot of like work hours invested and money invested to do that, and there wasn't like a huge reason to do that. Now they're promising us some tools for that.
Yeah.
No one knows what kind of, and we're waiting, just waiting.
Well, I guess we'll have to do another discussion on that then in a year or so to see how the practical implications actually work. We are out of time, but I would like to still ask you a few questions, and sorry for the audience, but if someone cannot wait till the end, please, you're welcome to watch the recording afterwards. But we will continue for maybe a few more minutes with Kristaps just to wrap up. Kristaps, I also understand that you still, even after the transaction, you still have quite a large portfolio still left in Rentejas ownership. So what would you say now? So for example, if at some point you would decide to bring this portfolio to the market, so what is realistic for such a developer and manager like you to sell the portfolio for in terms of the market yield for the segment?
You think that the prices and everything? Precise information, actually.
Meaning for the future, just how do you feel the market looks in that sense, for example, compared to other segments maybe, or your subjective view, let's say?
If we compare the offer of our property portfolio before selling it to BTA and portfolio value at the moment, then it's not a huge decrease of that. It might be that if we wouldn't have BTA, might be forced to struggle to find a new investor in the market. There are only few of them, but still we wouldn't evaluate it like lower than it was a year ago or 2 years ago. Because yeah, there were a lot of offers, but we weren't ready to sell it as a bad business. It's a good business, and we're waiting for a good offer. And yeah, we received them, and there wouldn't be a reason to tell that this business has like a drop in the value for rapid like gap. It might be that we evaluate it some 3-5% lower than before if we take the data from this month rent and etc. But basically the value was made not like through the property side, but like investment and values and incomes from the rent. And
of course. But for you know, aspiring rental apartment developers maybe, and for someone who is now maybe building their own portfolio, what would you say that they should aim for in terms of the exit yields in the Baltic market now, given your experience with various offers?
The yield rate, you think?
Yes.
What would be? Yeah, definitely not 10%, and definitely not 20, and etc.
Glad to hear that.
7 to 5%. It's really optimistic. It might be, sometimes might be higher. For example, before the crisis, when it was possibility to raise the rental prices, yeah, it was possible to get it more from that.
Yeah.
But the good thing that this income will be stable. It doesn't depend if it's raining outside or not.
Okay, good. And just to close our discussion, so also any advice to the market participants on a perfect product for the rental apartment? So you already mentioned, so 1 to 3 rooms, 50-60 square meters, maybe anything else, any hints and tricks you learned throughout the year?
The main thing, I think it's not the square meters, it's the location. as always, it was in real estate. And the second thing is you have to be client oriented. You have to talk.
It's not cold-blooded.
Are living in your property. They have their house, their home in your property, and you have to be ready to discuss with them and be like client oriented.
Yeah. Thank you very much for this discussion. I think this is it for today. We kept our audience for long enough, but it was really interesting to hear your opinions, and good luck with the rest of the portfolio and operation, and we hope to see more interesting things coming from you guys.
And I hope that the information I gave is useful for you.
We will see with the feedback from our discussion, so we'll let you know.
Yeah, thank you.
Okay, thank you very much for everyone for joining us today. And as Kristaps said, I hope that it was useful for everybody, and we are looking forward, I guess, to see you in the next webinars.